Welcome to Let's Talk Forex, or today I guess we should call it Let's Talk Crypto. So today we're going to be discussing the latest trends, data, and technological developments that are driving crypto prices at the moment. So enjoy the episode. I'm Alison.
And I'm Chris, and thanks for joining us. In today's episode, we're going to be examining the key forces driving crypto market movements that we've seen so far in early 2025, and particularly in light of the recent price declines that we've seen since the start of the year. And then we'll also look ahead to what may lie on the horizon for the rest of the year.
Yeah, just a reminder that Forex trading is risky and so is crypto trading. So this episode is for educational purposes only and should not be considered trading advice. Hi, welcome again to the episode. So we're going to be talking about crypto, as I said above, and I just want to shout out to Ida, one of our colleagues, who actually wrote a brilliant article on the topic, and we're going to be drawing a lot of what we're discussing from that article. So I'm sure you'll enjoy it.
Yeah, no, it should be good. Yeah, it's a really brilliant piece. So we'll it's not quite published yet, but we're going to have it published in the next few days, and then we'll put a link. We'll put a link in the bottom to it when it's out. But exciting topic today, I think, Alison.
Yeah, very exciting and very interesting, I guess. Just based on
Volatile.
Yeah, very volatile. Based on what's happened over the last sort of 6 months, I would say. After closing out 2024 with significant momentum, we obviously saw Bitcoin hitting over $100,000, which was something that a lot of traders were anticipating. And Ethereum hit near the $4,000 mark, but we've seen a huge pullback. And, as of late March, Bitcoin is down approximately 10% on, year to date, and Ethereum is down over 40%, which is massive, but not unexpected for crypto, I guess.
Yeah, I mean, we're used to seeing these huge, price decreases and increases, but Ethereum's performance in particular, I think, has raised eyebrows because it's led many to think, are we simply seeing a healthy correction after an overextended rally off the back of last year, or whether there are deeper structural concerns that are coming to the surface now. Either way, look, price action has shifted. Market sentiment is down, and this is especially true among retail investors.
Yeah. So today we're basically be looking at the macro and the micro, trends behind these price retreats, and we're going to be particularly looking at the regulatory changes and then the technological trends, and we're going to also consider, based on what Ida's written as well on the research she's done, what could turn things around, and what to look forward to in the coming months.
Yeah, exactly. So let's start with regulation first. This continues to be a bit of a double-edged sword for crypto. On the one hand, we saw a strong rally at the end of 2024 when Donald Trump, during his campaign, he signaled a more supportive stance towards crypto policy in the US. And that optimism there was a major contributor to Bitcoin's surge past the 100K mark that we saw at the end of last year.
Yeah, and as I've said, the markets since then have cooled dramatically. And one thing that a lot of people are saying, and that may be sort of causing this, is the anticipated regulatory reforms that haven't actually materialized as quickly as people had hoped. So the crypto community is largely waiting on clear guidance from the SEC and from other agencies. And of course, uncertainty always causes these sort of price movements. So that's probably what's contributing to what we're seeing at the moment.
Yeah, I think it's having a major impact. And to be fair, look, Donald Trump and his administration have had their hands pretty full, as we've talked about previously on this podcast, with all the tariffs and everything they're coming through. But I think, crypto believers, I think they were expecting some kind of definitive action at this point, which, as you say, hasn't materialized. But in contrast, the EU has moved ahead quite decisively. The Markets in Crypto Assets Regulation, MiCA, is the acronym, came into effect in December. And this offers a really clear legal framework for crypto assets. And that's positive for long-term confidence, particularly for institutions. However, in the short term, the compliance requirements may actually be slowing activity. with this is the thing with more regulatory acceptance, you get more compliance, you get more paperwork, more red tape. And this is particularly true for smaller projects and exchanges.
And, if you look at the emerging markets like South Africa, you also seeing a tightening of rules. And they've also got new crypto service provider requirements that are set to begin this month. I don't want to say too much about South Africa and the FSCA, but, this is while you can read between the lines there. So while this is a step towards, I guess, legitimacy, increased compliance costs, I guess, may be discouraging a lot of the market participants. So this is a concern, I guess, in the near term, while the FSCA finds its footing, as we saw with the ODP licenses, which caused a lot of drama and people sort of waiting to see what was going to happen.
Yeah, no, it's you're right. I mean, this is what we said. Regulation is a double-edged sword here, but it does offer certainty. And I think as soon as the SEC and the Trump administration come around to actually delivering some kind of definitive outlook policy for crypto, I think we may see a little bit more calm in the markets. The second thing I want to talk about here is the institutional inflows. So this was a really big driver of the rally at the end of last year. Spot Bitcoin ETFs were launched in several jurisdictions, notably in the United States. And we saw a wave of traditional financial institutions exploring tokenization and on-chain settlement tools as well.
Yeah, interesting. And you wonder if they've now pulled into gold instead. Yeah.
Like everyone else.
Yeah. But, as we saw with the prices falling in the first quarter of this year of 2025, these inflows have definitely slowed. So institutions are obviously being more selective, and they are, especially with Ethereum, as you say. So there are concerns around gas fees and layer 2 fragmentation and a lack of clear use cases post-merge. And these are creating, hesitation. So there's a lot of factors to consider for the institutions. And of course, you want to be on the same side as the institutions if you are trading Ethereum. So definitely something to be aware of.
Yeah, but the lack of clear use, I think, is a really important point. Ethereum remains a foundation for DeFi and NFTs, but investors are watching really closely to see whether the protocol can evolve fast enough to compete with more scalable alternatives. And I think this recent sell-off we're seeing where, as I said, over 40%, I think 43% sell-off since the start of the year, this really reflects those doubts at an institutional level.
Yeah. Still, the infrastructure is in place, and if the macro conditions improve and the regulatory landscape and clarity increases in regulation, then there's every reason to believe that institutional interest could reignite this year. And we've seen that many times before. So it's certainly not something that's out of the ordinary.
No, I think that's absolutely right. I think once we get some kind of certainty from the regulatory side, especially in the United States, I think we could see a rebound. But it is something I think to keep in mind when, especially particularly with Ethereum, that there are these institutional doubts about long-term use. But yes, the third thing I want to talk about is artificial intelligence. The buzzword that won't go away. And so we really need to consider the impact of AI in trading, particularly in crypto trading. We've seen a significant rise in AI-driven bots and quant strategies. And these systems that people are using and institutions are using and all kinds of anybody who trades on a serious way is probably using, they really amplify volatility, especially during times of uncertainty. And they react to headlines, price action, volume shifts, and they do it almost instantly.
Yeah, I mean, exactly. In early March, we saw a sharp drop in prices following that regulatory rumor that was later proven false. But by the time human traders could respond, the algorithms had already sort of triggered this cascade of stop losses. And these feedback loops, we're seeing they're becoming more and more common. So they contribute to these very sharp and quick short-term moves that we're seeing. And by the time sort of everybody realizes what's happening and what news the algorithms are reacting to, it's almost too late, or everything sort of happened before you can get there to mitigate the effect of the news.
Yeah, exactly. I mean, and crypto is already volatile enough. So adding these AI-driven systems into it, is making what's an already volatile system even more volatile. But on the flip side, AI is also being used for fraud detection. which is great. So risk management, optimizing smart contracts as well. And so this, I think, also offers a long-term support for the health of the ecosystem. So even if we're seeing AI drive short-term price volatility, I think in the long term, it's probably going to be a boon for the crypto markets.
Yeah, I guess they're just going to have to sort of trade in a different way, figure out a different way of trading using algos and AI. As you say, Chris, I think from a safety point of view and how AI can help that, it's much better at detecting patterns, I assume. So, and that's not so easy for humans to do, even with the best technology in place. So, yeah. But if we turn to stable coins and tokenization, these two areas have remained relatively stable despite the broader market weakness. And stable coins continue to gain adoption, which is interesting, especially in emerging markets. And they're very fundamental for decentralized finance and cross-border transactions. So this is also something to be aware of in this space.
Yeah, no, exactly. A lot of the fears around stable coins have gone after we saw, I think a couple of years ago we saw major instability among stable coins, ironically, but they've got and the prediction is the stablecoin market could top over 500 billion. This year, and that idea is still in play despite the recent downturn in the crypto markets, because stablecoins provide liquidity, they provide ease of access and protection from volatility, which is kind of what people want at the moment. So they're really valuable tools for traders and institutions.
Yeah, and tokenization is another bright sort of spots. I guess we've seen real estate and bonds and even carbon credits move onto the blockchain. So this expands basically the access to traditional illiquid assets and allows for fractional ownership. And this could revolutionize the capital markets in the long term.
Yeah, no, it's true. It could make a real impact. It's nascent, but it's growing fast. But let's also not forget NFTs. They've been around for a while, but their NFTs are they're quietly shifting into more practical areas like gaming, identity, intellectual property. And while prices for the traditional NFTs that we've seen over the last few years, with the NFT boom, like collectibles and stuff, that market has dropped. The underlying technology is now being picked up by other sectors, and it is proving to be resilient.
Yeah. And we've also seen a shakeup in the altcoin landscape. So projects like Solana and Avalanche are holding up relatively well compared to Ethereum, and therefore, yeah, and their fast, low-cost infrastructure is attracting developers and users. And again, for gaming and DeFi apps,
Yeah. No, it's true. I think there's I think they're going to they can have a major impact, I think, over the coming years, these smaller projects. And then, of course, there's the meme coins, which we've also discussed before. And they continue to play an outsized role in investor sentiment, in retail sentiment, particularly. And, while the prices, we've seen them drop. I mean, I think we've talked about Trump's meme coin, and his pastor's meme coin and Melania's meme coin. Many, they're evolving though. They're evolving, they're changing. They're not staying still. They're adding staking mechanisms, their governance models, and even DeFi features as well. And so that could help them transition from pure speculation to something more sustainable, like a real investment. I mean, I wouldn't hold my breath, but look, this is constantly evolving landscape. So it's definitely something to keep an eye on. They're not going away, I think is the main thing we can say here.
So I guess what's next for 2025 is the big question. It's obviously clear that optimism has cooled, and but the fundamentals are still basically evolving in the right direction. I mean, we haven't seen Bitcoin drop to 15,000 like it did in 2022. So it's still sitting at the 80,000 mark, which is not bad. I would say. The question, is whether we're seeing just a temporary pause after last year's excitement and exuberance over Trump's appointment in the SEC, or whether this is the beginning of a longer consolidation phase. So I guess it remains to be seen. It's certainly not as optimistic as it was at the beginning of the year and the end of last year.
Sure, and much of this is going to depend on external factors. So monetary policy, inflation data, geopolitical risks. The crypto market is now much more aligned with traditional markets, but within crypto itself, as you say, I think the foundations, the fundamentals are still sound. There's continued development of infrastructure, there's a regulatory acceptance, and the real world utility. We're talking about those stable coins. They're going to continue to provide this foundation support for an eventual recovery, I think.
And it's also worth remembering that cycles are normal. Crypto's maturing, and while prices are down, the actual ecosystem, as we were talking about with the stable coins and the tokens, continues to grow. The smart money is watching what's being built on. They're not just watching what's being traded. And you always want to watch and follow smart money. It's a very wise to sort of follow what they're following. So, yeah. So keep an open mind, I guess.
Yeah, exactly. I think that's right, Alison. So that, I think, about wraps it up for today's episode. If you found this discussion helpful, make sure to subscribe and like, and leave a comment below if you've got any questions.
Yes, and if you enjoyed this discussion, as you were saying, Chris, please go and check out our website for the article we were talking about, written by Ida. I think you'll find it very interesting and very enlightening. And particularly if you're a crypto trader, go and have a look. I really think it'll give you some very good insight for the possibilities for 2025. Thank you so much for listening, and we'll catch you in the next episode.
Thanks, Alison. Speak to you soon.
Cheers, Chris.